the IMF says Kenya could accumulate more debt than it can afford to repay comfortably at the rate the country is borrowing. The fund warned that the trend may force it to cross the 50% threshold of sustainability by the year 2024. Now, though Kenya has historically been below the standard threshold of 50% of the present value of its future debt obligations, the rise in interest payments and the cost of borrowing was a concern. The government plans to borrow about $4.57 billion in the fiscal year through June 2017 and another $2.2 billion from the domestic market to plug its spending shortfall. Now, IMF resident representative Armando Morales joins me in the studio with some more insight into this. Welcome to the studio, Mr. Morales.
Thank you, Chair, for inviting me.
Now, of course, I'll start with the fact that last year, the IMF classified Kenya's debt as low distress risk. Now you're a bit more concerned, and so are the economic analysts here in Kenya. They're all saying at the rate Kenya is borrowing, it cannot sustain it. What are your thoughts on whether Kenya is heading towards a train wreck? How serious is the situation right now?
So let me say up front that the assessment was conducted in March. It was discussed at our board in March 2016, and that's the latest assessment we have conducted. But as you can imagine, behind a yes and no answer regarding debt sustainability in Kenya, there is a complex reality, and there are many factors at play. So one factor is the fact that the starting point, as we call it, is sound. Kenya collects revenue that is sufficient to pay the recurrent spending every year. Kenya can borrow from domestic markets in a sufficient amount to repay debt falling due year after year, and that's why net domestic financing has been positive for a long time. So it's not true when people say that tax revenue is used mostly to repay debt. It's not true that Kenya is not able to borrow in the market, and it's not true that they are borrowing to finance recurrent spending. That's the good side of the story. But the assessment we perform is actually a forward-looking exercise. So when we look at the future and we look at projections, what we find is that policy deviations can be more damaging to the macroeconomic outlook than any exogenous shock affecting the economy. So we feel it's important to remind the audience, the authorities and the public in general, that commitment and consistency of policies with fiscal consolidation is a very important element in this assessment of debt sustainability.
Now, what are these policy deviations you're talking about that could be a threat or a risk?
It's mostly the consistency with the fiscal consolidation commitment,
Right.
that in the medium term the government, in several occasions, including the highest authorities of the country, have reiterated that that's the intention of the government. But that has to be a continuous effort. Any deviation, sometimes for understandably, sometimes for different shocks hitting the economy, could take place, but the planning in medium-term expenditure framework and the planning of public investing over time has to be consistent with consolidation in the medium term.
Now, you also warned, or rather the IMF also warned about a $3 billion undisclosed debt risk. That is certain infrastructure projects, contracts that add they add to the current debt stock of the country. How serious is this? Is this a real cause for concern when we talk about Kenya's growing debt profile?
So let me clarify, it's not that there is any undisclosed debt.
Right.
What I was referring to is the debt that is guaranteed by the central government, that is mostly coming from the so-called parastatals or state-owned enterprises. In fact, in our assessment, we include everything, the debt contracted by the government and the debt that is guaranteed by the government. So in that sense, the exercise is conservative because we don't include the revenue generated by these parastatals, which is also used to repay the debt. We only take into account tax revenue, and still we find that debt is sustainable, as our last assessment indicates.
Now, shifting focus a little bit, what are your thoughts on the government's plan to sort of put pressure, some of that pressure on its budget, on the taxpayer, on the Kenyan taxpayer, especially given the fact that a revenue generation from taxes wasn't so great in the first quarter of this year?
If we look at the medium term and the year after year, tax revenue has been increasing by more than nominal GDP. which is a positive development. It shows that the tax effort has been actually quite proactive. It has been lower than projected, and we can see that there are several specific tax measures that haven't yielded enough revenue as expected originally, like the VAT tax reform in 2012 actually hasn't translated into a significant increase in that revenue from that source.
Right.
So we believe that actually the tax authorities should continue making these efforts, because at the end of the day, what the spending is going to pay either by today's taxpayer or by tomorrow's taxpayer. And therefore, it's necessary to be fair, first with different taxpayers paying their fair share. Second, trying to minimize the risk of business having to finance the deficit in forms that are not efficient. We hear a lot of stories about tax refunds being delayed, for example. That is not a good way to raise tax revenue, as you can understand.
Right, right.
But the tax policy should also be fair with future generations. So it's important that everybody who has to contribute today is contributing their fair share.
Right. Now, I'm curious to know, how has this all affected the IMF's outlook on Kenya? These recent concerns, you said you had a meeting in March about some of these concerns. Going forward, the IMF did have quite a positive outlook when it comes to Kenya in the community, the region. Has this changed your outlook? Have all these concerns changed your outlook for Kenya?
We will have a team visiting Kenya in a couple of months, where they will have a thorough assessment of new information on macroeconomic developments, and then we will be able to have a more informed view.
Right.
For the time being, we just want to raise issues that are warning signals that I think is important to ventilate publicly.
Right.
And also, you mentioned the 50% threshold of debt.
Right.
The 50%, when you have most of the sources of financing being concessional, is actually a number that is not intimidating.
It's not intimidating.
But over time, as Kenya moves to a middle income status, then they will get more and more commercial financing, and then that 50% could be a challenge.
Okay.
So we want to put things in perspective.
Well, thank you so much for joining us in the
Thank you
studio
very much
with
for
your
inviting.
views. Of course, Armando Morales, a representative with the IMF here in Kenya.